with its goal of never ceasing to learn, the Vinod Gupta School of Management, IIT Kharagpur, is proud to host the esteemed co-founders of EPIKInDiFi, Mr. Rajendra Awasthi, Mr. Shubhomoy Banerjee, and Mr. Sushmitshri Babu, for the next edition of its online leadership talk series, Vaakya. Enriched with over 2 decades of industrial experience in areas of banking and technology, the co founders came together to form EPIKInDiFi, a technological disruptor in the banking and financial service space, offering agility and close attention to customer experience. In a short span since its inception, EPIKInDiFi has been able to acquire an enviable clientele list across 5 continents, spanning credit unions, commercial banks, and fintech startups. We welcome you all and thank you for taking time for us today. Without any further delay, I would like to invite our guests to address the inquisitive minds for what promises to be a riveting session on the past, present, and future of fintech.
How does the whole thing has got panned out. Take a case of airline, take a case, I'm not talking about casinos, gambling, gaming. Take a case of leisure and facilities, auto part, oil and gas drilling. Okay, all of them have got impacted. These are all the big movers, globally. So nobody's traveling, so airlines are down. All your hotels, resorts, the entire travel industry is down. Nobody's buying cars or anything related to that, so the entire the chain is down. And because nobody is driving, because everybody is at home, so oil is down. I mean, the oil is at probably the lowest in last 20 years and things like that, right? So you can see that the impact is going down, down, down. Now this was March. Now what is happening now? If you look at here, so while that was done by S&P, this is being done by McKinsey. And what McKinsey has done is they have, from March onwards, they are going and talking to various CEOs of various companies across the globe, and they are taking out some, running survey that what is the, the mood, what is the mood of economy or economic condition or business condition which is going to happen. So if you look at here, what they are doing is from March onwards, they are asking these various global CEOs, and you can see the number below, 1,000, nearly 2,000, 2,000, 2,000. These are the number. These are the number of CEOs is spread across various parts of the globe. When they have taken this, they have asked question on the two aspects of customer demand and company's profit, which is the expected change in their company in respect of these two parameters in next 6 months. Okay, this is what they have done. And what they, you can see it here, is that the number of respondents which has, say 28% felt that because of this current crisis, 20 when March 28% felt that the customer demand will decrease, it has jumped to 48% in April, which means nearly half of the CEOs saying that the customer demand is going to go down. And you can imagine when the customer demand goes down, what are the cascading effect. But after that, peaking that 48% in April, you can see that in May and June, it has gradually come down from 48% to 41% to 36%. So now, if March 28% will saying that customer demand will decrease, come June, 36% are saying that the customer demand will decrease. Okay, and I'll tell you what is the significance of these two. Similarly, on the customer profit, if you look, the 33% said that it will decrease, and in April 61% said it will decrease, but that is down now to 49% which are saying decrease. And the correspondingly, the number is increasing. What is the significance of this slide? I think the significance of this slide is that if you look at the period of March and April, and all of us have gone through that, uh, the whole what do you say, the prediction of future was very, very uncertain at this moment, March and April. But I think It's I think it's while it is quite alarming in India, but globally I think the things have people have started to believe that it's not as bad and as severe as they have estimated. So that is where this signifies that, so the optimism is returning in the CEO's mind, saying that yeah, it's not all that bad. Yeah, it's bad, but probably it looks okay. And 6 months from now, I think this is going to be much better. Okay. Moving forward, if you look at here, this is another question. Uh, what is the customer demand, which is going to increase in which industry in next 6 months? And this is a very revealing, survey. Again, this has been, those number of, CEOs which you have found. You can clearly see that while in the first you can see that the optimism returning for 6 months. When you look at here, you will find that the demand between April to June, they believe that the demand will increase in the sector on the left side, which is the retail, high tech, capital and infrastructure, and financial services. And the degree varies. So black is April, what they were, percentages were thinking, and June is what is the blue. So you can see that clearly see that these four industries are where the things moving in a positive territory. And surprisingly, if you look, the worst hit where growth is not going to happen is healthcare and pharma. Whereas couple of months back, healthcare and pharma was like, going, up direction. All of you would have seen it. So you can see that the travel and transport continues to be problem, automotive continues to be problem, consumer and packaged good continues to be problem, health and pharma is continued problem. That means, they're not expecting that so much of the medicinal medicines are required, okay, or the medical equipments are required. So this is where, that means all the traction is going to happen here in this retail, high tech, telecom, this is all lot of software products here, working capital, manufacturing of software and all of that. A lot of infrastructure work is going to happen here, and a lot of work is going to happen in the financial services. Okay, which clearly says that while optimism is happening in which all area, as it will happen, it will move. Okay, moving forward, I think this is another very interesting slide. In the last two slides, if you see, the questions were related to what is going to happen in the company, what is going to happen in the profit, what is going to happen in the industry. This is what is going to happen in your territory, in your geography, in your country, right? And it's very revealing. While those are very, what do you say, giving a kind of positive view of the whole thing. But you look at here, what's happening here. Look at Greater China. Look at North America. Look at India, and look at Latin America. If you look here, right, three pillars, India and China, between May and June, there's no change, right? So what they are saying is the CEOs of these two economies are saying that there's not going to be any change in next 6 months. Okay. Look at America, they are saying that there is going to be some change, but they're not going to be major change. Okay. And if you look America, North America, and Latin America, pretty much they look same. If I add all of this here, this is a very significant thing in terms of the overall global recovery of economy. Why I'm saying this? Look at here, these are the uh, three of the top five economies in the world. Okay, you have China, you have US, you have India. Okay, you look at here, there are top two economies are sitting here. Okay, now, also look at it, if in terms of population, we are talking about nearly half the global population here, nearly half the population. So if nearly half the population and nearly half the GDP of, the global of the planet Earth, that's not going to change in 6 months. You can imagine that the other half will require a lot of effort to pull and bring it back to where it was, right? So there are a lot of action looks to be, positive territory in Middle East, North Africa, a lot of territory in Asia Pacific and all. But I think this is going to be a Herculean task to bring it here, right? So what does it paint? It paints a picture, if I summarize these three slides, that situation is better than what was anticipated originally, but still I think there are a lot of challenges, geographical challenges are still remaining, industry specific challenges still remaining. Okay, as we will deep dive down in other areas, I think this context will give you a view saying that where are we heading in terms of the the economy as well as all the economic activities. Okay, any question so far, or you guys will ask the question in the end? Rashi, Jharna, questions are all in the end.
So usually we'll have the questions at the end.
Okay, okay, fine. Okay. So moving forward to the second one, I think this is a very important section. So I'll take you here in terms of so what is the impact of now we are diving down to the specific area which we are talking. So I talked about the the global in terms the industry per se and all, and now we are just diving trying to dive down saying that what is the impact of this event on fintechs and financial services. So let's move forward. Now, coming to the first, I have broken it down in two parts. The first part is we are going to talk about what is the impact on the banks and financial services of the established players. What is the impact they are facing on what are the challenges they are facing and what is the impact on them going forward. I think the first thing which is coming very, very, very obvious across the globe, and we are in the industry and we are kind of listening this on daily basis, that while there's a lot of work and a lot of dollars have spent in last 5 years on every bank doing work on the digital, but what's coming out very clearly is that there is not adequate digital maturity. Okay, which I think is becoming a big problem for the banks because of the lockdown, because of various other constraints. Suddenly a lot of banks are finding it difficult to reach out to their customers, or they are finding it difficult to meet the requirement of the customers which is emerging. The problem with the bigger bank is that I think they're so much process driven and so much bureaucracy driven that they are not able to make those changes and adjustment very quickly and roll something and go on, right? So all the big ones are saying, okay, we will come out with the RFP process, we'll come out with an RFP which we'll roll out, and then we'll call for a quotation, then we'll do assessment. By the time they do everything, it is a 6 month job, and then they will start the implementation. That's another 12 months gone. So practically that the this is going to be a big challenge for the bigger banks. They're trying to address, but I think they're really struggling on it. What is the second impact they're having? I think they are feeling a very sharp fall in branch based transactions because not many people are visiting the branches. I mean, India, I don't know how many of you visit the branches, but India, country like India and even a country like US, there is a lot of people, there are a lot of people who like to visit branches. There are a lot of senior citizens who like to visit branches. There are a lot of this SME, MSME customer, they have to visit branches. There are a lot of these, small traders, when they collect cash, they have to go and deposit cash in the bank. The people who are running petrol pumps, they have to go. So there is a lot of branch banking happens, and that is why you'll find that there is a lot of every bank has so many branches in India and elsewhere in the world. But because of this lockdown and because of the current ongoing situation, there is a severe drop in the branch based transactions. Now all of this I will tell you that what is the overall impact is going to happen, which means that less and less people are going to the branches. Okay, so I go to the ICICI bank branch nearby. Earlier, say January or before this started, when I go, you will have a lot of people in the branch. I went 3 days back, there are hardly any people in the branch. There are hardly any people. Actually, there are more number of staff in the branch than the number of customers. So this is like, I think, very significant for the banks and financial institution, because they're sitting on a big real estate. They are incurring those fixed expenses month on month. Whether that will really be required going forward. What is the next impact? Elevated bankruptcies. Uh, this is an impact on the customer of the banks, because as you have seen in the previous slides, because there are a set of industries which are going to have impact in terms of their business not doing well. For example, travel agencies, hotels, the automotive part manufacturing, and so on and so forth, right? What is going to happen is many of them are either going to incur huge losses, or they are going to file for bankruptcy. If they are not able to sustain the losses, they are going to file for bankruptcies. All of them have exposure to these banks, right? Which means these bankruptcies will have a direct impact on the banks. How will it have? The delinquencies will go up. The delinquencies will go up. It means that the non-payment of the dues will increase. And because non-payment of dues will increase, the NPS will increase, which is a direct impact on the viability of the existing banks. I mean, you can imagine, right? It's all how so very intertwined and linked to each other. And it is something which is always impossible, it's impossible to dodge the bullet. What is happening on the other side? Their credit lines are also getting stretched. So government after government is saying that, you please give moratorium. Please give 3 months moratorium. Now in India, every bank has been asked to give 3 months moratorium, right? Everybody is pushing that interest payment for 3 months. But banks are also, they have also borrowed from the other side while their interest is not coming. And any delay which is happening where the penalty used to collect, they'll not collect. All that is part of their income. That income is not coming, right? But they have other side where they have borrowed. There is no relaxation on the other side, saying that while you are giving moratorium this side, please also have moratorium on the deposit which you have from the depositors. Governments are not telling that, which means the banks are getting squeezed on both sides. On one side, they have to continue to pay the interest on the deposit they have borrowed, but on the other side, they are having this problem related to moratorium and other things on the credit line. So that's another problem of their margins and other things getting squeezed. So you would have seen recently there are banks who have posted good profit in the Q4 of last year, but some of them are not posted any profit for the current quarter or whatever their estimates are. Okay, and it may be even worse as they will go along, this quarter to next quarter to following quarter. And all the banks, they are not just dealing independently in one currency, say INR. Every bank deals with multiple currencies, because every bank has expats. Every bank does a lot of letter of exchange, trade transactions, trade finance, and all of that, right? And because the exchange market is so volatile, you don't know which direction which currency will go, which direction dollar will go, what will happen to the oil. The gold is just shooting up through the roof, and they all has an impact on the exchange rate, and that exchange rate has a direct impact on the bottom line of the banks, because they try to control the treasury function, and that treasury function is whatever they are making exchange out of it, they try to make a profit out of it. And the banks, they take a forward position of covering the exchange, but that's where they are getting squeezed. So you can clearly see that, and this is not just the situation in India. This is a situation of the problem being faced by banks globally, because these phenomena is happening globally. The industries are getting impacted globally. The central banks and governments are asking for moratorium globally. So everywhere, this whole problem is happening. So they are really, staring at a lot of problem in the financial services and the banks. What is happening in terms of the fintechs? The story is different in terms of the fintechs. I have put it here that 2030 has arrived 2020 for fintechs. Why? So fintechs so you will find that the story for fintechs is quite different for story for the established banks and financial sectors. The fintechs were going in a particular trajectory in last few years, and in terms of the investment coming, in terms of new areas they are working on, in terms of new business model they are coming out, all of that, I think they're going at a trajectory. What has happened is that the whole trajectory has just got accelerated. So what would have been a neobank would have achieved in say 2025 can probably achieve in 2021, because now everybody is saying that okay, I want to do something digital, I don't want to go to the branch, I want to do transaction sitting at home because I'm forced to do it like this. So there is a whole churn of 2030 arriving at 2020. It means there's a big opportunity which is opening up for fintechs. The second thing which is happening is because of this, the current situation is that open banking, the movement across the world is just getting acceleration. And as the whole idea of open banking is that because the banks are holding all the data and of the customers, and that's where they're sitting tight. Once the open banking comes up, this is like you're breaking one more entry barrier in the financial sector, because then the data is available for everybody to work out the models, right? So there are a lot of players who are working in India as well as other part of the world, who are the aggregator of various open banking services which is available. Okay, for example, we are working with fewer players in India, we are working with few other players in Australia, we are working few other players now in other markets and things like that, right? This is just going to get accelerated. As it will get accelerated, okay, there are new opportunities will emerge for people to come forward and take it. This is a story is like, how does it help? So all of you are aware of the story of Aadhaar. What happened in case of Aadhaar? When the Aadhaar came in picture, till the time Supreme Court, came out with the order, the number of fintech models which emerged just based on the Aadhaar, because the KYC just became so simple. The number of models that came out was unbelievable. The numbers were just staggering, because everybody could then the customer, which is a basic primary requirement, and then you can stitch any product around it. Similarly, when the open banking will come, that kind of innovation and that kind of push will come. That's the second point. Third point, I think all of you are also must be experiencing, and we are experiencing, and I think this is what the trend we are saying is, there is a permanent change which is happening in the payment behavior. There are two basic reasons for it. The first reason is that I think people are very scared of getting infected. Currency is probably the the big carrier of infection, when it gets exchange hands. So people are saying that it is really required for me to do exchange on currency. Okay, so that is a one thing where even in say India, you will find that even the the roadside vendors, they are saying, okay sir, do you have Paytm, can you pay by Paytm? Because that's what people are saying, that rather than me carrying currency, can I pay by Google Pay or Paytm or anything like that? Okay, so that is what is one behavior which is changing. On the other side, the people who are using the the cards, okay, debit and credit cards, those people are now going for the the contactless cards, rather than swiping in, typing in the pin, and that pin is again carrying the infection from the finger. So now they are going for the this contactless credit or debit card. Now these are the These are convenience for the people. Okay, and these changes are not just happening in one part of the world. These changes are happening in many other part of the world. So, for example, there are many countries which are very, very strong in using the cash. India is one of them. Germany is another one. Australia is another one. US is another one. And all of these places, there are uh, changes, noticeable changes are there in this behavior. These behavior, when they change, they don't go back. Okay. The next one is cloud. We are seeing this, we in the industry for, several decades now. We have seen that the cloud has come in existence for, last 10 years. But there is a lot of resistance of, banks moving to the cloud for various reasons. Security is what gets quoted, but, there are various other reasons for not going to the cloud. But now, is it there is a very clear movement which is happening from say the data center managed by banks, large data center to the cloud, and this is happening at a very rapid pace. Now this is a one big another barrier down for the fintechs to pick up and do something. So you can see that while there are a lot of challenges which is happening on the bank, on the large bank side, but when it comes to fintech, you can see that more opportunities are emerging. Now, what is the situation which is going to happen to unicorns as well as the new incumbents? Okay, all of this, what you see here in the first 4 point is you can see that all of this will lead to permanent change in behavior of customers. And when the permanent behavior change will happen, that will require a new idea to meet those new demands which will come from the customer. Maybe latent, maybe visible, whichever it is, right? And typically, you will see the unicorns will be born when somebody hits an idea, which is which is going to meet a large latent demand of the customers, right? So that is where I think the next unicorns are going to emerge out of this whole crisis. So it is not that the existing unicorns they will have a jolly time and they will be able to get out the other side. It's not possible because the behaviors are changing, and because the behaviors are changing, whatever the business models were there, is not necessary that this business model will still sustain. Business model still will change, which means the existing unicorns can go out of the business, and the new unicorns may emerge. So we have still not seen, we are only 3 months in this challenging time of COVID. There are multiple different predictions: the first wave, second wave, third wave, whatever it is. It may last for 3 months, 6 months, 12 months, we don't know. So unless this whole wave is ridden, we'll find all these things happening. Moving forward, I think the important thing with fintech is going to be the how agile they will be, because the changes are happening by hour as we speak. The customer demands are changing, the customer pattern is changing, customer behavior is changing, and the people who will be able to very quickly embrace the changes, I think they are the one who will be successful. Now, if you look those two slides, I think it gives a very clear picture that the fintech continues to be a very exciting place in time to come, and I think it has just become even more exciting because of all these changes which has happened, which means that is going to become a place where more action will happen in next 5 to 10 years. Okay. I'm going to hand it over to Sushmit to talk about the next section, so which is going to talk about what we are doing as a Epic in terms of looking into this and what products we have created. Okay, I will hand over to Sushmit. Sushmit,
Hi, can you hear me?
yeah, I can hear you.
Okay, because I see some low bandwidth, that's why I checked. Okay, so So in Epic, so like Raj mentioned, and we are going through extraordinary times which we've not seen before. So our focus has been in the area of digital automation, and how we can give a better experience to enterprises customers. So what we have been, Raj, if you could move to the next one. Um,
Yeah.
yeah. So, we are in the space where, especially, we are looking at from a in the space of banking, we are looking at providing a complete end-to-end digitized as well as digitalized life cycle of a loan. That means, earlier there was the comfort of someone from the bank going and visiting the customer, meeting the customer, get to know the place where the customer works, get to know the surroundings which where the customer lives. But in today's world, if you look in this post, in fact we are still going through it, going through the COVID situation. The need of the hour is for us to be able to manage the entire loan life cycle with absolutely no touch, right? So that means getting new customers on board. So that's selling more and more loans to the people who need it. Once you sell, service them again in a manner which takes care of the post COVID realities in terms of social distancing. And also at the time of this, where the whole economic activity across the world is impacted, how do we, for the loans that are already disbursed and given to the customers, how do we take care of, like Raj said, every government after government is asking for a 3 months moratorium on interest payments, right? So how do you take care of distress situations and at the same time look after your bank's collections, because ultimately bank makes money when they collect, right? So what we are working on, and with our customers, is a complete end to end digitized uh, uh, lending life cycle, including selling, servicing, and collections. So if you look at today, with the whole COVID, the one of the areas that we have especially focused in last couple of months is the collection, because there is the harsh reality is that there is a dip in in disbursement of funds due to the impact on the economic activities. So how do banks they collect better? So we have innovated in the area of customer assistance, wherein we've launched in fact we've launched with one of our customers in Southeast Asia. How do a self-assisted option for a customer, existing customer of a bank, to go and opt for deal moratorium on their interest payments. And not only that, because once this economic activity hits, there are a lot of SMEs, a lot of personal individuals, whose revenue and incomes have been hit. So a lot of them have applied, right? So one challenge is to be able to give the customers an option to opt for the interest moratorium. But after that, the real challenge comes for the banks is, how do they monitor it on an ongoing basis? How do they see that thousands and thousands of customers who have come in, what sort of industry do they belong to? Are they from a, let's say, if an SME who is let's say running a travel agency, right? An SME who is running a travel agency vis-a-vis let's say an IT company, or a small time some other companies which are not that impacted by COVID, there is a difference, right? So you need to be able to analyze the data and see who the customer is, which industry do they belong to, what has been their past payments, how are they impacted on an ongoing basis with the emerging situation, right? So we've innovated in the area of collections, especially using analytics and digital offerings to be able to help customers to apply, and on an ongoing basis the banks can monitor them. Another area which is where we have innovated in a past couple of months. You will see that, as I said, on one side, so there are three things, right? There are three. If you look at, there are three, pillars. The one is selling. Once you sell, then you service, and then once you service, ultimately you collect the loan back, right? So in terms of servicing, again, I think there's a big shift which is happening as to how do you service your customers. A typical, the branches are there, they're not going to go away completely. So still, there are people who would visit to branch for some or the other activity. So how do you manage in this whole, while you serve people in the branch, how do you manage to be able to maintain the social distancing? Because branch was something where you can just walk in and wait in the queue and maybe wait. If you want to deposit a cash, you go into the branch, take a queue number, a token number, and when your token comes, you can actually go to the teller and deposit the cash, right? But now the situation is different. You can't just allow a crowd to be present in the branch. You need to be able to maintain the distance and at the same time not inconvenience the customer. So how do you do it? Gone are the days, even for a offer a token system, where you need to go and touch the screen. So everyone wants to avoid any contact, as much as possible, right? So we have innovated in the area of queue management, where be it, let's say, a video session where you need to talk to or someone from the branch, maybe, let's say, for inquiry of a new loan that you want to take, or you want to go and perform certain let's say cash deposits in the branch. You can seek an appointment online. And it is just like Uberization of what Uber has done is on demand taxis, cab service. So this is essentially on demand banking service, where using the comfort of your own phone, you apply for an appointment to avail any service, be it in person on the branch, or remotely over the video. And the queuing system takes care of routing you appropriately to a resource who is available in the branch or at a central office, giving you an ETA, just like Uber would tell you that, hey, wait, your cab is coming in 10 minutes. So that's what we have done in the area of queue management system. Another big area, and we are seeing a lot of uptake for it in India and now in other places in South Asia as well as in Australia, is the usage of video. So if it was a pre-COVID era, most likely we would have been in your premise, in your auditorium, having a session with you. But look at what is happening today. We are virtually, we are in a virtual room with over the video. So be it online account, savings account opening, or a loan, a new paradigm is coming in, where you use the video capabilities to authenticate a person, to get to know who is, to authenticate various collateral. So let's say if it is a savings account, and let's say I want to open a savings account today, I don't need to, with video KYC regulations, RBI promoting big time, I actually don't need to visit any branch. All I can do is get onto video, introduce myself, show my ID. And there are capabilities today where from the video you can actually do a face match of the person with the photo ID. You can extract data from the photo ID and go and look up into government sources, where you can validate the ID number and the name. So there's a big usage of video in doing KYC of the individuals, KYC of the SMEs, as well as verification of collaterals being used. So let's say if it is a loan against, let's say, a vehicle, or a loan against a property, right? Loan for a vehicle or loan against a property. You can actually, the agents can, like all of you are sitting at home, the agents don't need to be on the road. The agents of the bank can be actually in their house. On over a video, they can actually ask customer to show the collateral walk around the property, show the location. All of that can be done in video, right? You can actually capture latitude and longitude, and you can actually detect where the person is. So new paradigm is emerging where you do more and more activity over video, but at the same time ensure that all the regulations, all the security of a physical in person meet still continues to be followed. So that's another area that where we are innovating. And last, the with this COVID situations, a lot of we have experienced with our customers that there is definitely a surge in call volumes. So be it if someone has taken a insurance where there is a need to change the payment dates, or be it loan, or be it, let's say, even in case of some of the customers, let's say car dealers, where the customer has taken a loan via their partners. There is a lot of surge in call center volumes where there is some or other query. So we are using our intelligent bot based systems that are capable of understanding what the customer is asking, and based on that, using NLP, respond to customers as to what the options do they have. And if customer choose an option, then actually take the customer through that option and complete the transaction, be it a payment, or be it a change in payment, or seeking a different appointment time. So these are, as I said, so overall across selling, servicing, and collection, a lot is happening in this COVID times to deal with the new emerging situations. Raj, is the at this
Yeah,
time the next slide
yeah,
is.
yeah. So I will hand it over to Shubho, and Shubho will talk about. I think what are I think the most important thing, and probably something which you all will be looking with great interest. That what are the actually skill required to be successful in fintech. So I will hand it over to Shubho. Shubho.
Yeah, hi. Thanks, Raj. Thanks, Sushmit. So, Raj, we have what, 10 more minutes?
Yeah, we have 10 minutes. I think
Okay,
slightly more also.
cool. So if you can move to that slide, Raj, the skills needed to be successful in fintech. So essentially, before I actually move to before I actually move to what are the specific skills which are needed, I think a lot of you have probably read this particular quote by Edison. Genius is 1% inspiration, 99% inspiration, right? I'm assuming most of you have come across this quote many times. And there has never been probably a time which is more relevant, when this has actually been more relevant than now, because you know as we are seeing the world over, that people who have been doing really well, their business plans are really sorted out, etc., for absolutely no fault of theirs, the world gets completely upended upside down. And then you might be a genius and you might have come up with a lot of new stuff, but you have to really use a lot of different thinking, or you have to dig deep into your own self to actually come out with the kind of skill sets which is needed to to tide over, and not only to tide over, to actually come out stronger through a crisis like this. So at Epic, we have a saying which is not as popular as the one which is on the slide, but hopefully it will be get popular soon. We believe very strongly in a theme that every threat is an opportunity. So while there might be, a lot of things which are happening, so each and everything which Sushmit spoke about, the 6, 7 products which we spoke about, they all, so we had a look at So how did we go about it? We had to look at, what is the current situation, what is the set of IPs which we have, and then we started thinking, okay, what can we do to actually solve the problems which are here and now as part of what is happening due to COVID, and which are going to be there for some time, and we can actually, maximize not only helping customers but also maximize our potential. So that is the kind of you know thinking mindset which is required, that yeah, it's a threat, it's a bad situation, but if you apply yourself, you might actually find something really cool coming out of it. So that's how we go about it. So if I look at Raj, if you could just go to the this thing. So if we look at, we have broken down the whole skill set required into three parts. One is the education. Okay, what are the skills required from an education? Second is behave. Okay, you will go this way. So in education, basically what is required? Okay, and all of you are engineers, all of you are doing MBA from a very premier institute. So the most important thing is that your fundamentals need to be strong, whatever you're doing. So from an engineering background, it's all about problem solving, right? I'm sure all of you know, it's not about just knowing calculus or advanced mathematics or something like that. It's about you got to problem solve, you got to engineer, you got to build something to actually solve the problem. So you have to have strong fundamentals, followed by which you need to from a skill set perspective, is that you need to have some specialization, because the era of generalists are kind of over. Everyone's looking for a niche where you can actually be really good at, and you can actually specialize and bring something unique to the table. Just having a generic management kind of a overview and saying that, yeah, I know a little about everything, that actually is not finding as much resonance globally. And especially at Epic, we look forward to people who have some very unique specialization. They know in depth about certain things, but also have a broader perspective. So that is as far as specializations are concerned. Followed by which, the most important thing is that learnability. Okay, because through your education, through your work experience, some of you who had, and through the specialization you might have certain skill sets from a particular problem solving perspective. But the world that we are all entering today, and earlier as well, okay, the problems change, and the problems statements have changed dramatically. So the only thing which is going to hold you in good stead is actually your learnability. So keeping the fundamentals strong, okay, but yet having the ability to learn and not getting stuck. No, this is my specialization, this is all I know, and this is all I want to do. Having that kind of learnability, because it is the application of your fundamental knowledge and problem solving skill which is actually going to bear fruit for you in the long term. So this is, we have because we wanted to highlight a few things from an educational perspective. These are the three skill sets which are going to be absolutely needed for you, or for anyone to be successful in the fintech industry, and I dare say in any industry. So then we move from an educational thing to behavioral. Okay, this obviously now starts getting into a little bit of a softer side. So the first thing out of that is your temperament. Your temperament is going to be extremely critical, because these are difficult times. Things are changing, things are evolving. You will try stuff, you will fail. But how do you have a growth mindset and not just work out of your comfort zone, and you have a very cool, composed temperament to say, okay, I understand I was trying to do something, it didn't work out. What is the best thing I can do? So that kind of having a temperament like that is going to be key for anyone to actually be able to be successful from a from a behavioral trait perspective. Followed by that is adaptability. I need not say, I'm sure all of you are adapting to changes in the overall lifestyle, changes to the environment, changes to you move from your native places to Kharagpur. So adaptability is the key for us or anyone to succeed. So in the fintech world, it becomes even more critical because the technology and the business problems are changing very rapidly, so you have to adapt. Your frame might change. Okay, so your ability to adapt actually is going to be critical in doing that. And the last thing in behavioral thing is ability to multitask. And I want to say that this is something which I have personally found a lot of MBA graduates really, 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 really struggle. Okay, because they're very good at saying, okay, this is a task, this is your group, this is what you need to do, and they will, put their heart and soul into it, go deep, do research, this thing. But the moment you say, yeah, you got to do this, but there are three other things you need to do, okay, everyone's like, okay, you tell me which one I should do. You have to do all three, or all 30, or all 300, right? People who, Kamakshi and Vignesh are, your batchmates are witness to that what it means by multitasking, and they can probably relate it because they've spent a good two months with us or more than that. That multitasking is everything, because you might have three calls one after the other, and each call might be on a different topic, and while the participants might be the same in that call, that is probably the new topic is the most important topic. The previous topic that time doesn't matter, right? So you can't say, but I was doing something else, now you're expecting me to do this. So I have seen a lot of people struggle with this. Okay, so this is something which I think each of you should really work on, from a ability to multitask, because you can do all the right thing, but if you are not able to multitask, I think you're going to struggle, overall, because the real world is about multitasking. Then, moving on to what we believe, okay, is the key is leadership skills. Because this is something which I don't know, most of you who would have attended the session and probably you don't remember, we keep saying is that we are not looking for, or, today's world is not looking for employees or managers. Okay, today's world is looking for leaders who will actually come up with innovative solutions to actually from a purposeful perspective to do betterment for the entire human race, right? So, and part of that leadership skill is actually proactiveness. So this proactiveness, I think, fundamentally differentiates leaders versus really good employees or managers, because managers and employees say, okay, you tell me and I will get it done to the best of the ability, you will have no complaints from me, and I will do such a superb job. Okay, that has very limited value in our view, because what is really important is not to be a really good follower, but to be a leader where you say, I will proactively take this up, I will come up with a solution, I will spot a problem, I will try and get it done. So proactiveness is the key trait which in our view separates leaders from from the rest of the pack. Teamwork is extremely important, because no person is an island, no group they will work is an island. So you need to work cross functional, you need to be able to work with technology. You guys have an advantage because you're all engineers. Okay, not everyone has that advantage, especially in a fintech kind of a scenario, that you will have to work across a multifunctional group. Some people who are pure out and out techies, like you would have been coming out of engineering background, some are product managers, some are functional people. So you have to have the ability in whatever role you're working to actually do that kind of a teamwork. And last but not the least is the ability to put in long hours. There is no substitute. Okay. Again, I would say I have seen people struggle with this. Okay. Because what I think, and I'm not sure, is it the new psyche, or is it a new normal or new cool thing to do, that you need to have work life balance, and I will work only 8 hours, remaining 16 hours are my personal. It doesn't work in the real world. Okay, what we rather say, rather than saying work life balance, which is honestly quite abused as a phrase, the way we like to put it is that you work hard, you party harder. So you might be working for 3 weeks, 4 weeks, 2 months, 2.5 months at a stretch for a go live or for coming out with a product. And once you're done with that, okay, then you take a week, 2 weeks off, just to relax, chill out, party, do whatever. But once you're back again, it's gonna be long hours, hard grinds, etc. Right? And I think again, Kamakshi and Vignesh, I've been really impressed with both of them. They've done an excellent job. I mean, from the get go, from day one, they've really put in long hours, and they've seen. I live in Australia. The rest of most of us are in India, and there have been times through this last 4 months. I would say predominantly the last 4 months every day, that when I wake up at 6 in the morning or 6:30 in the morning or 7 in the morning in Australia, we still have a chat because people are working till 3:30 in the night in India. So that is not only required because extraordinary times requires extraordinary measures, extraordinary effort, because that's what is going to differentiate us. So if you look at this as a whole, if you can imbibe a lot of these, I mean, these will appear to be generic gyan, but I can tell you that in the real world, these are the one which make a difference. What degree you have, how much percentage you've got, how innovative thing you think you are. All that is good only as a ticket to enter the party. But if you really got a party, then you need to display all of these. So this is how I would categorize as what is really needed from from actually getting into a shape and form where you can really contribute into the fintech industry. So I have one more slide, but Raj will probably skip that and we'll get into Q&As.
Yeah, I think we'll get into the Q&A, Shubha, because we have taken a 60 minutes time.
Yeah, so hopefully that was helpful for you guys. Okay, so happy to take questions. I can see some questions popping up in the chat. What is the way to do the Q&A? Prashi?
So we can read out the questions to you, and we can also check out the questions if that is okay.
Jharna, what I will suggest is you read and put the question so that we can then answer.
Sure. So the first question we have is from Sankalp, and his question is, how do you think the banking industry will change given that we have so many fintech players which start out as digital payment solutions and aspire to become banks eventually?
Okay, so let me answer this question. So when I was in, with your previous batch last year in the campus, I think I put in a slide saying that what's happening between the bank and the fintechs. Okay, so it's a very interesting journey which is happening. See, if you look, the banks, they make money in, broadly two areas. Okay, the first area is the payments, where they will take the commission of every payment they transact, and the second area is the loans, right, where they will give the loan and they'll get the interest. Okay, if you look at the fintechs, what they have started fintech and what they have done over a period of last 10-15 years, PayPal is like probably one of the first fintechs, if I may say so. They have taken away the entire payment piece out of the banks. Okay, so that's why you have a Paytms of the world here, or Phone Pay or PayU and whatever it is, right? Right from here till PayPal. So pretty much that is the first thing they have disrupted out of the business of the banks. The second thing where the disruption is starting to happen now is the lending, the loan. There I'll see a lot of fintechs in India and everywhere. They're all coming saying that, I'll give you loan. People are coming saying that I'll give you salary loan in 5 minutes, 2 minutes. There are people who are coming and saying that, I'll do a SME loan in 5 minutes. I'll do this loan in 5 minutes. That's the second thing which they are disrupting. So the question is whether the fintechs will become bank or banks will become fintech. I think it's a journey which is happening. I think the banks are trying to become digitally innovative, where they can face the competition from the fintechs, where fintechs are trying to, expand their canvas where they can just do rather than, the limited thing they've started. So if you look, say, Paytm as an example, started as a payment wallet, became payment bank, then it has become a what do you say, online mall where you can buy and sell. So that's how the markets are evolving going forward.
Thank you for that answer, sir. The next question is from Pravina ma'am. She says, thank you for an engaging session, and it is very interesting to hear that the bank customers deciding the moratorium and loan refund schedule, Uberization of appointment for the need of physical visit, video verification of collateral on real-time basis, still ensuring that all regulatory requirements are fulfilled. How do we as teachers inculcate learnability among students?
Okay, so thank you very much, ma'am. Good evening, and very nice. I would have loved to meet you in the campus, but thanks anyways. And thanks to your students for hosting us.
Hi, Raj. Raj, can you hear me?
Yes, I can hear you, ma'am. How are you?
I'm fine, Raj. Subho and Susmit, thank you for such a wonderful, engaging session. In fact, I learned a great deal today, and I'm very happy that I unfortunately I couldn't join immediately as soon as the session started. I started probably 15-20 minutes, but it's been very, very interesting session because I have interest in finance as a subject. But my question today is more from a teacher point of view today, that how do we inculcate the habit of learnability? Because strong fundamental specialization to certain extent, in my view, we are able to do it. But my concern is that students learn, attend certain subjects, appear, exam, and probably after 4 or 5 months down the line, when you discuss some fundamental things, probably they have kind of a forgotten. Of course, the responsibility lies with us as a teacher, that we may not have done a good job of teaching the fundamental to them. But the question is from my side of view, if I have to do certain things in the class which will make them their learnability better, what would be your advice?
Okay. Thank you, ma'am. Thank you very much. Shubha, you want to give a shot?
Yeah. Praveen ma'am, thank you. I think you bring out a excellent point, and it is so heartening to see that kind of progressive thinking. So I will tell you how we look at learnability. Okay, maybe probably that might give you some idea. So the issue is not about knowledge, like you said, specialization. I think everyone has that at this level. The issue is that everyone always wants to work in their comfort zone. That is the natural tendency of human beings. Okay. The challenge of learnability comes when people, either due to circumstances or are forced to work in a area outside their comfort zone. Okay. And far
Okay.
too often, people are not used to that model. Okay, so if I look at that, how you can prepare someone for being quick at learnability. And learnability doesn't necessarily mean that you need to be an expert in that. It's about, you're in a difficult situation or you're in an unknown situation. How quickly can you learn to navigate that, to slowly get over the learning curve and then master? So, in the way we probably go about it, and that's why if you see, when we had conducted the interviews also, we had a very different way of conducting interviews. We did not do the same thing. So it's about getting people out of their comfort zone. So anything from a teaching perspective, practical perspective, where you can give people certain pieces of work, but then probably, as a planned thing, change it halfway and, change the goalpost kind of a thing and see how they react and how they keep learning to it, maybe one way, because we actually do that. We see where people's natural interests are and we actually give them something else to do. That's how we will test the learnability, because we already know if they are good at something, they anyways will excel in it. So that's not a problem.
Actually, Subho, what happens in a educational system, we get very straight jacketed in terms of midterm abhi hoga, itna hoga, ye hoga, itna karna hai. So I don't know, and somehow I feel I know where are you coming from, but somehow I feel that as a teacher, there lot needs to be done from our side, to take impart those skill sets among the students. But many a times I feel that probably we are not doing a good job.
No, yes, Sushmit, go ahead.
Yeah, Praveen, my personal view, and I'm actually, because when we were in college, we used to do same, right? 8 hour a day, in college with most of the time on theory and little bit of time on practical. But when I will give an example of your own student, right? Vignesh is working with us, and this is what I believe really spurs people's interest. So we were solving a problem in collection, and we said we will take a very analytics based approach where we will go and study the data and see what are the patterns emerging. How does it help us to approach customers and increase the bank's collection efficiency. So when we started doing it, obviously, we started with, we asked Vignesh to look into the different statistical models, algorithms which are available. And, ultimately after working for about, 1.5 months, he has done a good job. So when I was sitting with him, I was asking him, so have you studied all of this in the college? His what he said was, yes, the coverage was there, but to be able to connect that to to solve a real world problem, that's something that we are getting to see here now. So I think one of the ways could be that this is in general, is that we introduce concepts to students, to people, but do not cover the entire theory, but rather with that introduction, let them start dabbling with real life problems. And as you start looking at trying to solve that problem, you would want to learn more and more for you to be able to do a good job at it, rather than covering a lot of theory at a go and then trying to solve something. That could be a way, but how practical it is something to be seen.
Okay, at least maybe next subject which I am going to teach, I would make I would ask them to make the group of students to take some real life problems by reaching out to company on a pro bono basis, and ensure that a component of that project will be I will be taking into the evaluation for grading.
Yeah.
Okay. Thank you. I mean, I have taken a lot of time, and thanks a lot. Maybe other students have other questions. You can take it up. Thanks a lot.
Thank you, ma'am.
Thank you, ma'am, for that enriching discussion. Thank you, sir, for answering those questions. The next question is from Devendra, and he's asking, if do you see the possibility of blockchain-like structure in finance, where people are lending to people directly at certain interest rates, and fintechs are providing the required platform and the customer ingenuity or security? If yes, how customer genuineness in such scenarios will be ensured without the existing way of mortgage or loan guarantee?
Yeah. So
You
you
want
to take that?
I'll take that.
Yeah.
So, Devendra, thanks for that, question. So the way, so there are, there are a couple of ways, how it is happening, and we are actually, leading quite a few of those kind of models today. So if you look at what ends up happening is that the genuineness of the customer, from a loan perspective, comes in two things. One is that is the person who the person says is, okay, through either ID verification, whether it is a POI or POA kind of a thing. And secondly, that, is what they're saying about their financial status or the business that they're doing or something, is that actually what they are? So that's about their credit worthiness, right? These are the two main things which are looked at before anyone gives a loan. So the newer scenarios which are emerging is something which we are actually trying to solve, is what we call as willingness to pay. Okay, because if you see every customer which becomes an NPA, okay, is has been has ticked the boxes of genuineness, has ticked the boxes of credit worthiness, yes, yet has gone bad, right? Because nobody would have done that without doing those things and giving them a loan. So what we are trying to do is we are trying to collate data, and we are doing some analytics around it. Collate some data, use analytics, and say what are the typical personas of the people, what are the characteristics of the people which you can find some commonality, and say that people with typically these traits end up becoming a bad loan kind of a thing, right? So you get those kind of parameters, and then start actually using that to probably give some scoring to people's genuineness, irrespective of whether they have the credit worthiness or not. And those are emerging models which are coming. As far as your question on blockchain is concerned, see, look, the important thing is not the technology which solves the problem. The important thing is, how we go about solving the business problem. Today it is blockchain, tomorrow it could be something else. So, I personally don't, believe that there is one technology or something which is going to be a panacea for solving the problem.
Thank you, sir, for
Okay.
answering that question. The next question is from Arvind. He asks, what should be the role of government in improving the financial health of banks in the future?
Okay, let me take that question. See, the government have the government and government along with the central bank, I think, are quite an important stakeholder uh, in the entire banking system in a country. Okay, and I think the reason bank exists, I think they are a very important pillar of the overall the economic paradigm of a country, because they are the the holder supplier of the currency and the money circulation in the system and things like that, right? So that is the reason, any country, not just India, any country in the world will always be very, very cautious about, the health of the bank and the banking industry. That is the reason you will see that, when the banks go down for various reasons, whether, the economic instability or, frauds or whatever reason which may happen, the government always chip in to say that the banks are recapitalized, banks are stabilized, banks are brought back into the business, because it has a dual impact. One side, it has an impact on the overall sentiment on the economy, overall impact on the banking industry, which has an overall impact on the macroeconomy on one side. The other side, I think it has an impact on the customers. There are millions of customers who will get impacted. I think the recent saga of Yes Bank, what you would have seen, what will happen. Imagine if it would have gone down, millions of customers would have lost their money and things like that, right? Fortunately, that didn't happen. So the government and the central bank, because all the banks in every country are governed by the central bank, will always be part of the banking system. They will always ensure the health of the bank. If it require, recapitalization, putting in money, doing regulation, and they'll keep doing it. This is what we are observing and watching. At least I started as a banker 3 decades back. So, this is what we are, watching and observing for all these years.
Thank you, sir, for that answer. The next question is from Spandan, and he's asking, recently RBI has announced newer rules for P2P lending as NBFC companies. How do you see P2P rise in India given the internet density ever increasing?
See, what has happened in P2P is the RBI guideline which has come is that actually P2P industry was not monitored by RBI before that guidelines. With that guideline coming in, actually the P2P industry is going to get regulated like NBFCs or any financial institution within the country. Okay, which means that they will have to follow the regulation. They will have to follow the RBI norms, which has come out for the P2P. The important thing is that RBI, if you look, they always work for the end customer's welfare while keeping the other objective. I think there's a main objective. So here also the P2P, the lender is kind of a main, whom they want to protect. So that is the reason I think they want to regulate the whole thing. They also want to regulate it P2P industry because they do not want the supply of money out of their purview, because they are, one of the job of Reserve Bank of India is to have a control over the overall money supply within the economy. So if one part is sitting outside, I think there was a question somebody asked about blockchain, a lot of crypto and what will happen, and open ledgers and things like that. But I think that is where the they have brought it, saying that it should not be out of the the preview. So when 5G will come, that will further enable spurt the growth of fintech, because the fintechs are trying to do is using technology. With that, they're trying to take the financial services to the last mile, to the last person who needs, right, the financial inclusion. That is what they are trying to do. They're, rather than feet on the street, they're trying to do by way of the the mobiles which everybody holds and things like that. So I think while they are disconnected, but I think the infrastructure, that money flow in, the technology coming in, I think that will spur the further growth of fintech per se, because it will help in doing the entire infrastructure may becoming available. Now in terms of whether there will be competition from the foreign player, I think competition from foreign player is always a reality in every sector, and you cannot just rule away. It is possible that there are a lot of foreign sector players are already there in India. A lot of foreign players are already trying their hands in different sectors, and this may not be may not be staying away from their purview of coming and trying different things. Like I was saying, that Facebook and like many things dot may be connected. They have launched a cryptocurrency. They are not able to take it elsewhere. Libra is not taken off. Maybe they will come and try doing it here currency. They will try to go and try to influence RBI in saying that let's try it at a government level, at a country level. So these are all possibilities which is there, and as those coming, they will spurt further growth of fintech industry in the country.
Thank you for answering that, sir. With that, we come to the end of all the question answers that are there in the chat box.
Okay.
Thank you so much, sir, and thank you to all the guests for such an insightful session. Your insights on the impact of COVID-19 on various industries and countries, changing customer behavior, and its impact on established and new fintech players, EPIKInDiFi's product to thrive in this COVID situation, skills required to succeed in fintech industry have been really informative and inspiring for us. It was a great opportunity to learn from your insights, and we are extremely grateful to you for sparing your invaluable time to interact with us. We look forward to several such engagements in the future, and we hope that this will be the start of a lasting relationship with you and your organization. Thank you once again for such an inspiring session.
Thank you, Jarna. Thank you very much. And I think,
thank you, Raj. Thank you, Sushmit, and thank you, Subho.
Thank you, Pravina ma'am.
Thank you, Pravina madam. Thank you very much.
Raj, at least you can say me Praveena. I'm not that old.
But you're the teacher, no, ma'am. Teachers always deserve a special respect. So that's the way I look at it. Anyway, I will
Okay,
call you.
okay,
I will call you
okay.
Praveen.
Thank
No,
you.
no problem.
Okay,
Thank you.
I thank you so much.
Yes, thank you. And I think I would like to thank all the students, being patient, being with us, listening to us. Hopefully, what we have shared with you will be with you for, it will come, some of these things may come good in your journey. I will wish all of you very, very, best for your careers and time to come. We are we feel very nice and proud that we have such a good relationship with prestigious institution like VGSoM. We have a lot of your seniors coming, this year to be part of our journey. Two of your batchmates did an internship with us. I think they had some, they tell us that they had a memorable time. I don't know. They will come and tell you what time they had. But anyways, we look forward to a fantastic ongoing relationship with VGSoM, and thanks for hosting us. Thank you very much.
Thank you. Have a good week ahead.
Thank you. Bye bye.
Bye.
Thank you, sir. You too have a good week ahead.
Yeah, thanks, Prashi. Bye.